Okay, guys. I'm going to have a bit chat with you about stops and areas of attraction. Roll the intro. Tell you all about it.
Matron, take them away.
And a warm welcome to one and all. First time here, big fella Scruff. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. Or at least I hope so. I mean, some like it, some don't. And something that I do like is just come wandering up. Love of my life winky, but with my coffee. Because we all know Scruffy likes his coffee, and he certainly does. And what are you doing?
Nothing.
Nothing. Fantastic. It's not going to cost me anything then.
I wouldn't say that.
Yeah, that'll be right. So, what do I mean by that? Well, I think when you're in the public eye, things can be a little bit different. Because I had some comments across the weekend saying, it's too easy and I don't do enough and all of this sort of thing. What you've got to remember is I've done this a very long time. So to me, it is easy. No different than a ballerina. You watch a ballerina and they do the pirouettes. They are very graceful, but it took them years to get that way. If I did it, I'd be like Nelly the elephant. You laughing at?
You said it.
Shut up, you stick. Well, I would. But that's the thing. Trading on the surface is easy. It's incredibly easy. And yes, I do get wound up by some of the Muppets that say, follow my system. And you're going to make a gazillion, because you're not. It all starts with you and your mindset. Now, some people's minds are a little bit doolally, you know, and I certainly figure that out by some of the messages that I get. And quite frankly, they shouldn't be trading in the first place. This is a very disciplined, very solid job, and it is a process you have to follow. And if you can't follow process and you're looking for quick money, you're finished. You can be a one-day hero and do some good results, but that doesn't make you consistent. You see me do this every day. Certainly in the squad, they see me do it every day, because I've kind of stepped back a little bit from public life. And as a disclaimer, if you ever see anything with my name on it in social media, etc., asking for any kind of money, it is not me. I don't do any of that. The only thing that I get money from, I guess, is YouTube and the Discord group. And that group is owned by YouTube. I just provide the content for it and get a small commission for it. Other than that, my salary comes from trading. So where am I driving at with this little monologue? Well, I was in business a long time. And I'm still in business because I work for myself. And the one thing you have to do is understand what is a good investment, what is a bad investment, and how to write off a potential loss. Now, when it comes to trading, a lot of people can't do that. So I'm going to kind of take you through a little exercise to help you kind of understand how this thing works. So let me just drop it onto the screens. And it doesn't matter what we're looking at. In fact, it's probably more important when you're looking at things like this. This is Darwin X. It's my private Darwin X. I don't show this publicly. It's mine. This is where I get paid. Okay, get rid of that. So you can see the results. All of these levels have relevance. All right, but because there are certain criteria I have to stick to, the risk side of it or the investment side of it has to be on point all the time. Okay, similar sort of thing with my 5%ers. This one even more so. Again, it's all measured out on point so I can see where it is and the levels are exactly the same. There are drawdown limits within that Darwin X. Within the 5%ers rather. It's a very good program. If you're interested, there's links in the description. but there are limits. And if I got my investment wrong, I can wipe those limits out. There is a daily point of pause, which is 3% of the account. If I hit that on a loss, I'll get stopped out, I'll lose the money. So I've got to be careful, all right? That's the prop industry. My preferred way of trading and making a living is from my own funds, which is what we're looking at here. And you can do that with small accounts, which we've been doing it with. Well, I've got 2 small accounts running called Vanguard to build up my Vanguards. One's on BlackBull. Now the BlackBull account, again, it's just a few quid a day. But if I get it wrong, I wipe the account out. So I've got to be careful. And I'm trying to hammer this home as much as I can, guys. And I know some people will switch off going, just get to the point. This is the point. If I don't do this properly, I'll wipe the account out. And if I've got no capital, I can't trade. Can't trade, I don't earn. It's as simple as that. So your money management is absolutely key. So let's start having a little look at it. Now you can go into market with without a stop as long as you know where you're going to get out. If you haven't got this mental discipline to kill it, you must use a stop. And if you can't, there's something sadly wrong. If you're stepping away from the screen and you haven't got time to monitor it, put a stop in. A lot of the time I go into the market without a stop. I don't need to, because I'm sitting in front of the screen. I know where I'm going to get out and I'm quite fine, and I don't want the initial spike. But once I've got the chart in motion and I'm happy with it, I do put my stops in. You know, it's just my point of entry. I don't need to unless it's starting to move against me, and then I'll put the stop in. But that's just me. It's just my style. It's what I do. But I never leave the screen unless I've got a stop in. So if I'm not here to monitor it, I have a stop, period. If I'm in front of it, it doesn't matter, because I don't even put profit targets in sometimes, because I don't need to do that either. Why? Because I've got a framework. And the framework is exactly what we're looking at right here. It's these levels. If you can draw these levels correctly, they'll tell you where to get in, they'll tell you where to get out. Now, there's other elements. How much you're willing to invest, how much you're willing to put on the table. Well, just because you put £100 on the table, that's not the end of it. You might want a percentage of that back. Now, if you're in business, you might want 10% return. So that means put £10 on the table, I get £11 back. My initial stake plus 10%. There's different ways of looking at it, guys, but always start one-to-one. So if you start in the middle, just for argument's sake, you open up a trade and it happens to be here, well, you have a one-on-one point of view, because you've got as much chance of it hitting that level as you do that level. And it's very simple. Stops on one, targets on the other. That's a simple process. Dead simple. But let's just take a look at price structure and how you would work things out. Your position size can be worked out relatively simple. Look at, well, here, I'll show you something. This is an account we started this week. Because guys wanted to see me trade pretty much the FTSE. I needed to get it over £200 in order to open the FTSE, so we added in the euro, but I don't need that anymore because I'm now above the target. So that bit we can get rid of. So we're now back to just the FTSE. That's all we're going to do. We're going to trade the FTSE for Vanguard. Now, this is telling me at the moment my bid size is 21p, or that's the maximum based on a 200 balance. The problem with the web trader that you're looking at, it has a minimum value of 50. Now, for those who get confused between bids and position size, a bid size and a position size are identical. They're the same thing. In spread betting, a bid size is a position size. Okay. But if you're on MT4, MT5, instead of it being a monetary value, it would be a lot value. So it would be 0.05 for 50p. Just as a quick one. So just to give an example, let's just say I'm going into said market, and you put your date in, and I will put in the current balance of 207 quid, just for argument's sake. So what I need to do is figure out what a daily risk allowance is. Daily risk, what I'm willing to let go on the day without killing the account. Well, I work on roughly around 5%. Okay, so it's 5%. So it's telling me it'll allow me to go 1035 against me on any combination of positions. So if I go in with multiple positions, the multiple positions need to add up to 1035. But if I'm going in with a single position, that'll be the maximum point. So what I need to do here is, just give me a sec while I switch off another spreadsheet. That's it. So if I go in here at 50p, it's telling me the maximum stop distance is 21. All right. So what I've essentially done is I've worked out how much I'm willing to put on the table. Then I'm going to work out whether my trade will fit in that criteria, not the other way around. Because one of the worst things you can do is you can do sort of gymnastics with mathematics. And I see it when you're trying to work out this, that, and the other. This is a simple way of doing it. That's how much I'm willing to risk on the trade today. Okay, it's 1035. If I put my position size in at 50p, it's 21 pips. Okay, so let's just look at the two scenarios here. If I want to go long, there are a couple of areas on this chart immediately I can see as potential problems. There is one here. Let me highlight that for you. There is an area of the chart here. Okay, we'll put it in red so you can see it. Why there? There is a key swing point that you can see. Key, just there. Now, intersecting through that swing point is also a high level fib and a high level support and resistance. So this price could easily come down to this point. Now, there's also another area in the chart that I can push to, which is here. And it's a major swing, and you've got multiple levels in and around that area. So these are the two main areas that we're looking at. Now, depending on criteria, I have to figure out, am I going here or am I going to stage to here? Now, if I was going short at this point, the area of attraction is there. So these are the three danger areas that the price can come and be stopped out at. So I already know at 50p, I've got a 21 pip stop. Okay, so I'll draw out 21 pips. Right, there's 21. That's already telling me I have a problem, because that could swing down well into this here. Why? Because these levels will pull the price to them. You know, they are natural draws. You could say, well, you've got a swing point here, but it's very shallow. Flag formation. All right, could be tight, get in, happy days, no problem. All right, you can put that on and then target up here. But the chances are the price will probably come here. Okay, so you have to be able to bear that heat. And if it gets through that, it's definitely coming here. So you've got to be able to bear that heat. So again, if I'm looking to get down here, I need that price to go beyond this and then some. Okay, be looking probably up to here, which is going to take it a long time. When you day trade, you want to be in and out within an hour to an hour and a half. So that's probably it. So, okay, so where is that point? Well, that's like 54 pips. Okay, that's 54 pips. Work that out. If I'm coming up to here, right, it's not out of the ordinary. Now the guys are going to know what I'm talking about in just a second, because I work on something called position 3 1-on-1 ratio. They know exactly what that is. Position 3 in this scenario would be roughly here. Okay, so what that means is I would stage into that point where all the staging in this area is one trade. Okay, I would break the position up if I had to. In this case, I can't, because I've only got one position to work with. So if I get rid of that, but actually I'll show you something with that, how that works, what position 3 1-on-1 ratio is. Run that through there. I would stage into here with a target point going to the next level, which is there. That gives me that. And then if I pull that down, what that gives a 1-on-1 ratio down to this level here and to that top level. Just means you can widen the stop, reduce the exposure, increase the upside. Okay, if you see the maths behind it, you'll see how it works. But this is just a watered version. So at the moment, I can target from here as a stop and then try and get up to here. That's reasonably okay. But let's just say I'm on my BlackBull account and I can put all my 5 positions in. Then I would definitely be using a position 3 1-on-1 ratio. Okay, definitely. Or I can reduce the position size to increase the stop down to here. And so from that point to there is 43 pips. So all I need to do here is, well, what would 0.2 give me? 52. So that gives me a 52 pip stop, which is there. And then if I just move that up to there, it's looking to brush the tops of this. So you'd be, in this case, slightly inversed if you got out of there. But what I'd have a tendency to do is start moving my stop up as it moves with me. But it allows me to breathe. Why? Because they are the draws. It's where the price will come to. Now let's say we go in the opposite direction. Get rid of these two. And we're looking at this. I need to be able to handle that. So if I'm going short here, I have no other swings. The chances are it's coming here. Why? Because unlike this situation, I haven't got that. So I have to have 44 pips of stop. I have to, because it's the tops of here. At best, it's 38. So again, I can come here and go, right, okay, 0.3. There's 35 pips. It'll allow me. 38. Okay, so I'm probably at 20p a position. And that's a quick, easy way of looking around. We go into this in more depth in the Discord. But really what I'm trying to get across is you need to map the chart. You know, and this is just a live chart. It's pound JPY. I'm actually monitoring this for the guys as we speak. But if I am going to trade that, these are the areas that I'm looking at. So if I'm shorting it, I'm going to have to weather weight up onto here. If I'm going long, that's my first stall point. But realistically, it's probably down here or down here that I can actually pull to. And there's a quick and easy way to solve this as well. You just get a fib, just like so. You go, well, there's a start point down there. It's up to there. Where's the 50? Well, the 50's there. If this retraces on itself, that's where it's coming. It's back to that level. Simple stuff, guys. Simple stuff. And the idea here is really to get you to think along them lines. Don't go in on a wing and a prayer. You know, look at structure. Look at the hourlies. because that's what it'll push with. 15-minute can just be noise and it can catch you out at any time. All right. Use your lower time frames for entry. Use your higher time frames, your hourlies, etc., to build up a picture of what you're after. So I hope that helps. And best of luck. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.